Hey guys, Ben Nash from Pivot Wealth here, and today I'm super excited to be here with one of our lovely clients, Hannah. Hannah has been working with us over the last sort of year or so, and yeah, we've done a whole bunch of stuff together. I'm keen to dive into a bit of that detail, but I think a good place to start, Hannah, and thanks very much for joining us, is maybe you could tell us a bit about what was going on when we first started having talking together.
Yeah, great. Thanks, Ben. My name's Hannah, and I would say what was going on for me. I was about to do a really big career shift and wasn't quite sure. I mean, really, it was a constant moving target, as you will
That is
remember.
true.
Yeah, for a few months, I was coming to you every single month, saying that my plan had changed. So, I was working at LinkedIn for 7 years and looking to potentially move back to the US, potentially launch my own business, potentially write a novel. There were a few different things going on, and I didn't actually know the full scope of my financial situation. So my investment portfolio was extremely scattered. I had investments all over the place. I was doing ESPP. I had a lot of RSUs, and just didn't know what I should do with my money. I was sitting on quite a large investment that was really heavily indexed just in only Microsoft stock. So I wanted to get a handle on my finances and just understand what position I was in, also understand what I could do in terms of flexibility. So if I did want to leave LinkedIn and start my own business, what options I would have. And that's when I came knocking on your door.
Well, that's yeah. I think you're totally right that when we first started chatting, you were pretty keen on relocating back to the US, but some other bigger decisions, and yeah, absolutely. It's amazing how your situation was probably a little more dynamic than most in that time, but it is amazing to see how over such a short amount of time things can change so much. Hannah, you mentioned a couple of things already, but what were your biggest sort of challenges or frustrations for you at the time that we started working together?
I think a big challenge was not actually, and this is going, I appreciate how this would sound, but I didn't know my financial position. So I actually didn't know how much money I had, where I had it. It hadn't been consolidated in any form. I had just kind of been investing here and there. I didn't really know what I was investing in. And I had no plan and no structure. And so I knew that if I either wanted to invest in property or continue to invest in stocks, and then also I think being in tech, you get accustomed to a certain lifestyle, and especially I'd been in sales for over 7 years. So I think a big challenge was really understanding my spending habits. And was I spending more than I should have? Was I spending over my income threshold? Should I be saving more? What did it all look like? And I think being in tech as well, you kind of get in a tech bubble. And I know that a lot of my colleagues see you also, and I know that you've interviewed one as well. And so you get in a tech bubble where everyone thinks that what they're doing, and you're surrounded by people who have pretty high incomes and just think it might be normal to be spending money how they're spending, but not actually thinking of the long-term implications of it. So I really wanted to make sure that I was investing in my future, but didn't necessarily know how. And with the demands of my job and the demands of my life in other areas, and to be fair, I'm not really interested in this sector of my life. I'm not really interested in investing. I'm not really interested in doing a lot of research. So I knew that this was something I really needed help with in order to outsource and in order to get some real guidance on my future and some real flexibility in terms of what I could do.
I think you nailed it when you say you do end up in this bubble, and it's something we see a lot. It happens a lot in, like sales is a common one where you've got, high incomes lends itself to commission, and you see people, your colleagues they buy the Range Rover, or they, get that fancy house, or the whatever those things are, and you just think that that's par for the course. And I don't know if it's an element of psychology in keeping up, or just what the expectation, thinking sometimes unfairly thinking that that's the expectation that we should have. But it's really easy for that to sort of ratchet out of control. And before you know it, you're deprioritizing things that are really important to you, so you can prioritize things that are nice, but really not that important to you. Hannah, a lot of people find that I feel like there's a bit of like, I don't know if it's stress or shame is probably the wrong word, but people end up in a too different position to you, where your money is sort of all over the place, as you mentioned. You've got stuff in different pockets, but not without a clear picture of what your position is. Can you talk to, and I suppose it's different for every person, but how that actually happens for people?
Yeah, I remember when you were looking at my portfolio and you were like, can I swear on this? I should probably. Okay. I think you were like, what the fuck is going on here? Like, what is this investment strategy? And I was like, I have no idea. I just like dated a guy who told me to put all this, like, to buy a bunch of stocks in this one stock. And then like Afterpay was going up. So I just like put a couple grand in Afterpay. I like bought some index funds, and just without really realizing. And I think too, when you're in a commission-based role, so when you're in a sales-based role, it's pretty, you can forecast, but your income really varies month to month. So you'll have 1 or 2 months depending on the structure, depending on if you're new business or existing business. But if you're in existing business, you could have 1 or 2 months that are just huge months throughout the 12 months. And then it's like you get a huge influx of cash, and then you're wondering what to do with it. So also, I had moved here 6 years ago and had some guidance of a financial advisor when I was 22 and about to move over. So you're then working on 2 different countries of like where you should invest. I had a superannuation in Australia, but then I had a 401k in the US, and then I had a life insurance policy in the US, and just kind of random things all over the place. Then I knew I should be doing ESPP. And I think in 2016, when Microsoft bought LinkedIn, I had not previously invested in ESPP, and all of my friends did. And they got huge payouts because of what Microsoft paid for LinkedIn and the stock increase. And then I realized that I was probably losing money on that. So it just ended up being very scattered over the years. And there was no consistent strategy, no thought to it. Commission would come in. I would just think, maybe I'll invest them here, maybe I'll invest them there, without actually giving thought to, well, this is what I want to do in the long term. This is what I want to do in the future. So then you have a couple of years of that, and it just piles up. And before you know it, it's just a very inconsistent, scattered strategy.
Yeah, and it's interesting because you had a lot of good stuff. Like it's not you're clearly you're really good at your job. You're making a decent living from that, and it's not like we're talking about pocket change here. That I think like you say, that a lot of people have that bit of a stigma that they go, oh, well, like that's actually I should be more on top of it, but it's actually just so easy especially when you are a high performer, that you're focused on the things that you're performing at, and money just can end up sort of all over the place. And what was the prompt? What prompted you to actually do something about it?
Well, and then I also just want to go back, and there's just this thing of like, and maybe this is just a millennial view, which really causes a lot of burnout, of like, we have to know everything and we have to be good at everything. So it's like, I didn't really not that I didn't want to admit, but I'm very much not interested in investing. I don't watch the stock market. I don't really want to read AFR. I was when I was working in sales, but it's and then also just kind of realizing like, okay, I get help in a lot of other areas. I go to the physio when I need help if I have an injury. I go to therapy because, I'm from LA and we all go to therapy. So it's like I get help in all other areas of my life. And then just realizing, oh, actually, I should probably get help with my money as well because I am in a really fortunate position. And I know I'm in a really fortunate position, but there are also just things that I don't know. And that's totally okay, which is really then why I did decide to come to you guys.
Absolutely. Yeah. I think a lot of people in that situation that you're smart, you're capable, and you think because you've got money in your pocket that, you get paid every month or you've got some investments going on that it should be simple. And then don't realize that the consequence is that you just, like a couple of things you touched on, just missing opportunities to be getting more from what's there. Mm-hmm. So Hannah, what was the prompt? What made you take action?
I knew I knew I was going to leave LinkedIn in some capacity. So I knew I was going to leave my tech job, and and I had a few different avenues. So I didn't know. At that time I was planning on moving back to the US, taking some time off, traveling. And I wanted a clear picture of my financial health. And then I also wanted options of if I wanted to travel for 6 months to a year, could I afford to do that? What would that look like? How would that impact me long term? Or should I potentially be staying at this role? So I think the real prompt for it was I knew that there was going to be a change, but I didn't necessarily know what. And I wanted to feel fully secure on what I was about to do.
And I'm keen to dive into that one a little bit deeper, but how did what we did help with give you, that you mentioned wanting to know that you're doing the right thing when you considering some pretty serious shifts. Mm-hmm. How did the approach actually help with that?
Yeah, I mean, we tactically, I think we set up a budget, looked after my spending, and then I was also working through some fairly big things at the time that you and I had discussed, and me and Marcus had discussed, and it was and some really quite sensitive topics as well. And I remember just one conversation where you and I had, and Marcus, and you just looked at me and said, look, if you don't want to work for the next year, and if you just want to take that time off, financially, you can do that, and we can set it up and we can make that happen. And I think it was really the peace of mind of knowing, and I feel really fortunate to be in that position, and that I was in that position and able to do that. But I mean, really, that was kind of what I got most out of it. And then just really saying, okay, we can set up a budget. We can look at your expenses. What do we need to cut? What do we need? What are the necessary things that we need to keep in order to keep you healthy and happy? And we did that.
Yeah, see, I think a lot of people think that it can be about sort of pinching, every dollar, but I think that the process for me, it highlighted that it's some of the things that you said, no, absolutely, this is, your health and well-being is a priority. So it doesn't mean that you can't spend on those. It's just going back to priorities. You look at, well, what's less important than this thing. And I think that's really different for every person. Mm-hmm. And we've covered a lot of ground through the work that we've done together. Talk us through, what are the top sort of 2 or 3 things that you think had the biggest impact for you?
I would say creating a budget, creating a weekly budget, understanding my spending habits, understanding where I needed to rein some things in, and also really understanding my priorities. And then, go ahead.
I was just going to say, it amazes me that I've done, a dozen of these conversations with our clients over the last little bit, and it's almost always the first thing that people say. And it's so interesting. It's like almost blows my mind that you go, well, it's just the most simple of things, and you're in it, you're in a really good position and you have so much potential, but we just don't. Sometimes it's the simple things that have the biggest impact. It just made me thought, because I said, I'm like, surely someone's going to say investing is the top of the list or something, but it just keeps coming up. So sorry, I cut you off.
Yeah, I think, spending outside of your means or spending unintentionally. And I think too, being in a sales role, being in a client facing role, there is sort of an expectation and a standard. And then also, not to really bring gender into this, but also being a female in a client facing role and really wanting to look your best, feel your best. And a lot of those things cost money, but it's like, where is it necessary and where is it not, and where do you draw the line? And I think that's where a budget comes in, about being realistic of, okay, this is your salary, these are your long-term goals, this is your monthly income, this is actually outside of your means, or this is within your means and you can keep doing this, but you also have these other goals that you want to achieve that also cost money. So where do you pick and choose what is really necessary?
And I think that there's also a lot of self-talk that that little devil that sort of sits behind us that wants to just spend all of our money on stuff that brings us this immediate pleasure hit, that we can look for and find reasons why we shouldn't be more responsible, or we shouldn't put a higher focus on the things that don't give us that immediate pleasure hit, but are really critical for our long-term financial security. Health and well-being is a similar thing, where it's like, it's easy to go on that binge eating spree, but and it feels good. So it's harder to go for a run, but we know that that's there. And sometimes you go, oh, I'm stressed or I'm tired. With our money, it's like, oh, I work in a commission-based role, so I can't predict my income. I can't forecast. It's like, bullshit, you can't forecast. Of course you can. We need a bigger bucket at the top, and then we need to provide for the leaner months. How long, what's the minimum you can earn in a month? How long could that possibly go on for before you get topped up? Okay, great. There's a process now. So, it's so much psychology. You've got to sort of, sometimes hack your way and have someone telling you, no, it is good. Yes, this actually works. It gives you the confidence to follow it through. So outside of the savings and budgeting, what are the other sort of top one or two things that you feel had the biggest impact for you?
I started to look at launching my own business, and at one point you created 3 different models for me of, okay, what would it look like if I were to stay in my current role at LinkedIn? What would it look like if I were to switch positions? And then what would it look like if I were to launch a business? And the reality of it as well, and what it would do, because I think it's really easy to stay in fantasy, especially around money, and especially if you have a high earning potential, but you do want to take a risk, which is ultimately what I've decided to do. But there are realities that come with it, and there are sacrifices that will need to come with it within the first year or so. And not to say that earning capacity couldn't far exceed what it has, which I don't want to undersell myself or people that do want to launch a business. But I think it was just understanding the full picture of what that would look like and the implications on my life, and then deciding and then weighing it up on, okay, do I stay where I am, or do I take a risk, invest in myself, invest in my own business, which doesn't really need a lot of outside capital. So, which is a great position to be in when launching a business, but it's still, my life still needs to go on, and I still need to pay bills.
Absolutely. Yeah, I still actually remember that conversation, that it was like, well, I'm moving on. I can either go into another, high pressure job where, maybe managing a sales team, or whatever the next level up in your career is. Then Or you can, yeah, maybe if we start a business, we're confident that we can back in, X dollars of per month of it's essentially a consulting thing is what we were talking about at the time. That I can back that in, and you may choose to have a, chill, run a chill business where you decide not to work very hard. That's probably the wrong way to say it, but not to work super hard. But that has a financial impact, which is less than what it would be if you want to go super hard on the corporate side. And then we just looked and said, okay, well, over 20 years, this is actually what that means. We know that there's a cost each year, that we know that that means less money for investing. We know that that's what it means for there. And it's about going, well, what is important, and is it enough? One, is doing it? Yes, it is a sacrifice, and people don't like making sacrifices, but the baseline is to say whether we should make this, even consider making the sacrifices. If you're going to do that and end up in a position that you're not happy with, then that's probably not a very viable option. Whereas if you go, well, actually, I'm good here, obviously you're going to be better if you keep gunning it and, pushing super hard on the corporate side. But maybe, like you say, that there's heaps of upside potential here, but if we want things to be chill and we're prepared to do that, then we know that there will be an impact on the bottom line. But if you're still good, then you're still good. And I think I think people often don't know all of the things that they should be thinking about when they do this, and then you can fall into the trap of thinking, well, less is bad, and so then you don't do what the things are that you're actually that are going to bring you the real happiness and fulfillment, and a life that you enjoy even more.
And it was about weighing the cost, and even saying, okay, there is a financial cost to leaving this very stable job with amazing benefits and amazing ESPP and RSUs, et cetera. But there's always a cost, and there's a cost to that. There is a cost to staying in a corporate role when you know that your desires really lie elsewhere. So it's kind of weighing up how much is something actually worth to you.
Yeah, absolutely. And again, just all back to priorities. And I'm keen to shift gears a little bit and talk about what are some of the actual results? What's the output of the process been for you?
Yeah, definitely savings within budgeting, but then also I think my situation was a bit different because the target was always moving. So liquidated all funds, and also looking at an investment strategy, because I'm an American citizen and an Australian citizen. So looking at an investment strategy, looking at tax implications in both countries, finding a diversified portfolio that wouldn't necessarily be a hindrance for my US taxes as well as my Australian taxes. So, and then because I have changed, really this has been like a huge year of transition, where it probably would have been easier to devise a strategy had you met me 2 years ago. I'm sure it would have been a lot less work for you and for Marcus. Probably. But I have had a pretty changing target. So at first it was like, okay, well, we need to liquidate all assets. And then in the US, find an investment fund when you move here. And then there was guidance on like you leaving my super here, et cetera, looking at what my super would be if I had left it here. And then a few months later, it was, okay, you are staying within Australia, looking to launch a business. What does that look like? How long do we need to stay afloat? And really being realistic as well, like in liquidating all of my assets in order to reinvest. Then we also did set up a safety net too of income protection. So it was like, worst case scenario, you make no money in the next 6 months in launching your business before we go ahead and reinvest everything and just kind of like hope for the best. Let's actually set it up so you do have a pot of money to fall back on. And also, worst comes to worst, like what's the tipping point of, if you're launching a business, if you're bringing in no capital, how long do you have? within that business to fight to actually say this is working or this is not working, and I need to assess other options. And I think the biggest for me with a constantly moving target, and also in leaving a job that I was very secure in, to take this risk and take this leap. I do think the biggest thing that I have gotten is peace of mind, and just knowing, knowing I have a team behind me, and knowing that actually I'm going to get straightforward and kind of saying, okay, you're actually reaching a point where we need to where you're doing very well, or you're reaching a point where we need to reassess. And I'm fully committed I'm fully comfortable that you or Marcus would say that to me. So it is that it's more peace of mind, what I've really got out of it, out of working with you guys more than anything.
I think as well that it's that peace of mind, like knowing that someone's looked at everything, that everything's making sense. It gives you more confidence to actually do the things. Otherwise you end up in this decision-making thing, and it's too hard, or I should do this. What are the trade-offs? What am I missing? Oh, I'll think about it. Then life gets in the way, and then more time has gone on. And then the time just goes on, and you're missing all of these opportunities to start doing the things that you want, but building that momentum and getting the results.
Yeah. And also it's I don't want to really the reality is that I am a single female. I don't have a family, and I don't have children to support right now. And while I don't necessarily want to almost give into the patriarchy of having someone say, actually, yes, here's what you can do with your money. It really did make me feel so much more secure in that, okay, I can take this risk, and I have planned for it. I have a full structure in place. And I have security behind that I am good for 6 months to a year. And I know, and people that are very knowledgeable in this space have backed that up for me. So I don't actually need to think about that. It's I can outsource that concern and have it be either confirmed or not confirmed.
Absolutely. And I think we've all got enough things to be thinking about. The more you can free up, the more it gives you that bandwidth to focus on, your business, your career, your the people that you care about, whatever the things are that are important to you. But it's easy to carry a lot of mental load around, and it causes suboptimal performance in all of those areas. Hannah, I'm keen to talk a bit about the US citizenship, dual citizenship, and the tax implications there. What have you learned about that in going through this process, and what should people be thinking about that are in that position, do you think?
Yeah, I think it's, for those that are US citizens, it's really understanding if you are buying certain funds, or if you are buying certain stocks, the tax implications in the US and the tax implications in Australia. So there was something I had invested in, I can't remember what it was. It was some app, and it was a roundup type of.
Yeah, and you're in an index portfolio.
I was in an index portfolio, and there I had a pretty decent chunk of money in that. It was I went to some seminar on it one day and signed up for it, and really just had money going into this fund. And I didn't know the tax implications until you and Marcus had flagged it with me, and then we looked into it from my US accountant, and my US accountant said actually the tax implications for this type of fund are quite high. So I think it's really understanding if you are going to invest in stocks or an index fund, what that looks like, and knowing what the implications are, because unfortunately, if you're a US citizen, you will be paying tax in both countries. So really knowing what that looks like.
Yeah, well, it's interestingly for any of the non-US citizens, but it's only the US and Libya that are kind enough to tax their citizens, every single one of their citizens, on their global income. But it's not actually like, we love index funds. That app, I think, was Raise, and Raise is a really good product in terms of how it works and the options that are there. And those investments are actually really great investments, but it's the reporting obligations that are such a nightmare. And I think I don't know if it's you or if I'm thinking of someone else, but it's like thousands of extra dollars that you have to pay for your tax reporting every year, because you've got, for any investments that have underlying interests around property trusts, because they have to look through like the US government want you to report in like all underlying holdings through all of the investments, which is time consuming and complicated to do. So the accountants charge more. But we actually see a ton of people that just do this stuff because you think you're doing the right thing, or other people doing it here, not aware of the tax obligations or not reporting to their tax obligations, which is super serious and a big problem over there as well. That it is, people don't know what they don't know. And I think that you really do need to, it sort of highlights, and I know that you're now talking to one of our contacts that helps people with that you really need to have good people on both sides, but people that have a broad understanding of the issues between. And while we don't do tax returns, but we know that you need to be thinking about that. We know that if you sell your shares, you're going to have to pay that state-based sales tax in America, but people just, they often don't know because there's so much complexity there. I'm a massive patriot when it comes to Australia, but I feel that when I look at this stuff for people, like, it's just so extreme, the reporting obligations, that I would, especially as your money evolves more, I would be seriously questioning, what is the value versus, what is the cost in doing that as well. But it's generally not a very palatable conversation with our clients when we talk to them about renouncing citizenship.
Oh, yeah, that won't be happening. But but it was when my tax accountant said, it will be an extra 500. I think it was like 400 to 500 on this return based on the index fund because of everything that we have to do here, and it was just not knowing that and not understanding that before I invested. And and it's actually really looking at accountants that are knowledgeable as well, and also being able to benefit from introductions within your network of accountants that know both US and Australian tax laws, tax implications, especially working when you're dealing with tax returns that have both ESPP, that have RSU, as people would be, which really is a lot of Americans that work in tech companies as well. Yeah. And what that means also, it's like not understanding, just not really knowing that when a tech company grants you stock, and you'll know this better than I, but my understanding of it is, I feel like this is a quiz right now. Have you been listening? When a U.S. company grants you stock, and then you're not actually paying tax into that you will be taxed at the end of the year for it, and not really understanding the full implications of the stock grants that you get. So, and the full implications of tax on ESPP. So it was just all of these little things that really add up, that you're then getting a huge tax return at the end of the year if you've been granted stock, and something that people don't even forecast for, or don't even know that that's what they're going to that's what they're going to be hit with.
That's right. And if you're, doing things like investing your money or buying property, or, trying to smash down your mortgage, then it means you can get caught short. So that forecasting, I think, is powerful. And something that's necessary. Once you start, the more your employee share plan income increases, the more important, the bigger the numbers get, and the more important it is to be doing this forecasting. Hannah, tell us, how are you feeling about your money now compared to how you were feeling before?
I understand everything. Like, I understand all of my assets. I understand my options. I actually know how much money I have, which, God, I feel like I sound like a moron on this podcast. But not knowing, I think it can be scattered over the years as well. And you invest a little bit here, you invest a little bit there. You don't really know where your 401k is or what jobs contributed to a 401k. But now I have a very comprehensive view of how much money I have, how much money I can invest, and then also how much money I need to be able to launch a business and to have a safety net underneath me.
Absolutely. Again, going back to sometimes the simple things, well, not that it's straightforward, maybe not simple, but can be the most powerful. One of the things though that we see when talking to people is that I think when people haven't gone down the financial advice path before, or haven't done it in the way that we do it at Pivot, they don't know what to expect or how it's going to work. Can you tell us what surprised you most about the process?
It was pretty. I think up front it is a little arduous, just as any tax. Like it's kind of like doing your taxes. Like you don't really want to do it, but you like have to. Like you really should be doing it. So I think it's a lot of upfront gathering. But then after that, it's pretty seamless. And even when we were talking before this podcast, I just called up Marcus, who I work with more day to day, and I just called him up kind of out of the blue. I needed some advice on something, on what to put for a rental application, because I was launching a business, and I sent it through to Marcus what I was thinking, and then he called me, like added some things, told me what to forecast. And I think it's just what surprised me is how much the support actually means, and how just kind of having someone that's really looking after you, how much peace of mind that would give you. But I think it's a bit of upfront work, and then also setting up my banking, like resetting up my banking, just how much more of an understanding I have of my spending on a weekly basis, and how it's broken down, and it's very simplified, and that gives a lot of peace of mind as well.
Yeah, you forgot to mention it also saves you time looking for references for your rental applications. You've given me a new business idea, a new line of business to go down after that one. But
Marcus is my reference on my rental application. I was like, hey, can I put you on this? Like, thanks.
He asked me, he said, can we do that? I'm like, yeah, I think we can, as long as you tell the truth, I suppose. Like it's
I'm like, well, like you really know like how much
that's right. Yeah, and we're not allowed to lie. So I think it's solid. Hit up your advisor, people. It's good. Hannah, what would be different now if you were going it alone, do you think?
I probably just wouldn't. I think that added anxiety of really just not knowing. And also it's, I was so heavily invested in one stock that I think there would have been some fear of selling, especially because that stock was Microsoft, and no kind of the confidence of someone to say, actually sell this down, reinvest. You need a pocket here to launch your business, and having that peace of mind. But I think if I was going at it alone, I wouldn't necessarily have that peace of mind.
Yes, and I think I get a sense from the conversations that we have had is that you probably would have been doing. There were things like you wanted to exit, like you needed to exit what you were doing to change things up. So I don't think that would have not happened, but I think you like you say that you just have that extra stress because you don't know, no clear plan, know that everything's good. Would you have sold all your shares? Probably not. And again, it's I think the stress benefits or the mindset benefits are sometimes just as important, if not more important, than the financial benefits. Hannah, what situations do you feel are suited to people having a financial advisor?
I think everyone with an income should have a financial advisor. That's something that I told, because I was managing a sales team, and that actually was one of my leaving remarks to them. And because they were also quite junior, some of them were young. It was just like, fully understand your money situation now, especially if you have, especially if you're young, you have a solid income, you're making decent money, and instead of just thinking that you can really buy whatever you want, kind of without a cost, which a lot of people, when they're in these environments and in these bubbles, you see your peers doing it, and all of a sudden it's like, well, yeah, I want that purse too, or I want those shoes too. And it kind of becomes this state that's perpetuated. But I think that understanding your money, understanding your long-term goals, understanding what you want to do, understanding if, let's say, in 1 or 2 years, you do want to launch a business and that's your long-term goal, or you're doing a side hustle right now that you want to take, that you want to take in, and you want to invest in yourself in certain ways. I think that that's really, whenever you start earning decent money, that's the time to get an advisor, and that's the time to look at this. And I would say as young as possible, because then you're just setting yourself up for a better long-term position.
And you also stop that bracket creep before it fully kicks in. So that, like, the lifestyle creep, and it's how much we invest now, it has the biggest impact 30 years from now, 40 years from now. So the sooner you can make it happen, then the sooner you start getting those results. So I agree, you need to have some stuff to work with, but getting that right foundation in place is something that just starts you on the path sooner. And I think for you, like for a lot of people we work with, in 3 years and 5 years, you're going to have a higher level of financial fitness and be making even better decisions. It's like a muscle that you build over time. It's not something that you just go, I'm going to do a financial plan and then that's going to mean that I'm financially successful. It's like all things, your health, well-being, relationships, career, business. Like these are things that you build your capacity in over time.
Yeah, and also understanding like how compound interest works, and exactly like what you're saying, how your wealth just builds. And I think like one of the best decisions I ever made was fully maxing out on ESPP, and just kind of realizing that I'll adjust either way. Even if that means sacrificing 15% and then looking at my gains from that, which then has allowed me to be able to take risks with my finances and be able to launch a business, do the things that I want to do, take time off of work and travel and write and walk my crazy toy cavoodle. So
it's true that people think that they don't want to give up their lifestyle. They think that they need to do that to create wealth, but it's actually the wealth that it's the other way around. The wealth gives you the opportunity to do, like, you couldn't, if you hadn't put in the work before, you'd be in a much more tricky position now, where you sort of felt that you're handcuffed, that you have to have a salary, or you can't, relocate, or you can't take that time off if that's what's important to you. Hannah, based on your experience, for someone that's thinking about getting financial advice, what would your tips be?
Ask around, like speak to people, understand, speak to people with like a similar financial situation as you, and also financial situation that you want too. Like, I love the phrase, like, take advice from people when you want what they have. So looking even if you're working in a corporate company, even looking 1 to 2 levels above you on where you should, and start asking around. Doing some research, but also like knowing if the advisor that you choose works with people in similar positions as you, and just really like, I think I spoke to a few different advisors. I was really comfortable with you guys. I had a friend that was also working with you guys. And the process just seemed like very seamless, very easy. But then I also have friends who, it's just been on their to-do list for 3 years to look at something. And it's like, it's never necessarily like, I mean, I don't know what you think. I don't know if like financial advice is like the sexiest thing ever. And it's like, no one's like, I mean, maybe it is. You tell me. But no one's like, oh my God, I'm like so pumped to talk to my financial advisor. Like,
what do you mean? Don't you say that every time before you get on the phone?
I love talking to you and I love talking to Marcus. So I am pumped because I really like you guys as people, but it's not like, it's just not like, you know, it's like going to the dentist. Like you should, like, you have to. I mean, a lot of people don't, and then they pay the cost in the long term. So I would say, like, the big
brutal, Hannah, like going to the dentist. Come on. You could say like going to the gym, maybe.
You know, I think it is going to the dentist, because then, you know, you're 60 and you're just like fucked because you haven't looked after your teeth. Like, you don't want to be in that position. Yeah. No, so, yeah. So I would say, if you're thinking about it, like, just do it. Make it a priority, because it is making yourself a priority and making your future a priority. And no one's going to do it but you.
Yes. And it's certainly not something that will happen on its own. That what we actually just had a client that engaged with us. I was just talking to Siobhan in the team 3 years ago, and then they, you know, it just sits there. It's on the list. Oh yeah, I'll do it. Then this thing's going to happen. I'll do it when that happens. I'll do it after Easter. I'll do it after Anzac Day. I'll do it after Christmas. Like, it's just, there's always a reason. Going back to that self-talk, like why we shouldn't do something that the sooner it happens, the sooner you start getting results.
Mm-hmm. Exactly.
And a last question for you, and thank you so much for your time and insights. It's been good, except for that dentist part. It's a really good chat. But tell us, like, obviously you're paying us a fee to work with us, and the big question that people have when they, you know, before they take that leap is to say, you know, am I going to get the value? Is it going to be worth it? In your mind, what makes our fee worth paying?
I think knowing that there's a long-term strategy, and the way I view the fee also is like almost like looking at my discretionary spending of things that I didn't quite know I was purchasing, or like I knew I was purchasing them but didn't have a handle on. And let's say it's like, instead of that money, instead of spending that, can I then reinvest it? Which is really what you guys are. I mean, it is an investment. So, but in order to, and like you have to put forth an investment in order to then get the gains. So that's how I view the fee structure. But again, also it's like, it's worth just really knowing and understanding your financial position. And I think too, especially as females, and especially as females that do make money, like from what I can see from a lot of my friends, it's like they will have money, but they won't really know what to do with it. And unfortunately, and not to really play into gender stereotypes, but it is a reality of it. And I think in order to fully stand into your own and be confident and know your options, and actually, it's like, let's say you are a 30-year-old or 35-year-old single woman and you want to buy a property on your own, and you want to really look at, okay, is that possible? What do I need to do, etc. Just really knowing your options. And I think having you guys in my corner just allows me to do that.
Yeah, I think that confidence is important, and the touchy-feely stuff is just if not more important than the financial result. I'd say just as important as the financial results. But I think it's funny for you, and I think I can recall back to the process that you actually save more than the fee just by changing some of the things that you're doing, you know, in terms of where you're allocating your money, what you're doing with your spending, what are the implications of some of those things we never know before. But when you see the process, when you go through the process, then it is actually highlighted to you. Do you think that's a fair comment?
Oh yeah, definitely. And also, like, we haven't necessarily yet gone down an investment strategy, but I do have friends that are working with you. But that's because my financial situation is a bit precarious, and that I'm kind of have been this ever moving target of what I'm going to do in the future. But I even know that I have friends that work with you guys, and looking at the gains that they were getting from their investment, which were quite huge. I think it was like up to 18%, just on the investment gains. So I have faith also of the portfolios that we are going to be investing in, and where I have faith in you guys that you are going to be guiding me on where I should put my money when I am to reinvest, when I am in a more stable position once my business launches.
Yeah, and I think that one of the things that people always think, and especially high achievers as well, you think you always have to be doing stuff, but the right move at the wrong time is the wrong move. So sometimes doing nothing or getting the foundations in place, not that you're doing nothing, but getting the right foundations on place to allow you to go to that next level is mission critical. But Hannah, thank you so much. I really enjoyed that. So many great insights there, and once again, really appreciate you taking the time.
Great, thanks so much, Ben.